Thank you everyone for joining this session. It's an honor that we have these two fantastic experts joining live from Sweden and Switzerland. This is, I believe, the fifth workshop webinar we are hosting since the pandemic has started, and it is interesting to feature experts from different sectors. This one is into blockchain and fintech, and we are happy to have Efi Pilarinou and Astyanax Kanakaikis, who will be sharing with us, first of all, who they are and share their views on the future, the trends they are forecasting for the future of the sector. So let's start with introducing ourselves. My name is Veroniki. I'm a team member of ReloadGreece for the past 3 years. And Efi, would you like first of all to share a few things about yourself?
Thank you, Veroniki. Thank you for having us. And it was a great pleasure that you reached out, and I understood a little bit better what the ReloadGreece is doing, which is wonderful. So my name is Efi Pilarinou. I am from Greece, from the island of Zakynthos. I have a very traditional financial background. I joined Wall Street after my studies, mathematics in Greece and a PhD in finance in the US. I worked on Wall Street for 10 years in fixed income structured products in New York, and then I moved into the hedge fund industry. I've spent a couple of years teaching in Canada at McGill University, and the last 6 years I've been living and working in Switzerland. And I'm focused on fintech. I have become an influencer and a thought leader. I create a lot of content, and I work with companies both on the business side, especially focused on partnerships, but also as an advisor and independent thought leader. So obviously being in Switzerland has given me the opportunity to see the blockchain opportunity early on, as we have a large ecosystem here, and we'll be talking about that tonight with my good friend Astyanax and his wonderful blockchain in finance venture. So I guess I hand it over to you.
What a great introduction. Thank you, Efi. So I'm Astyanax. I'm the co-founder and CEO of Norbloc, a company specializing on regulatory applications, harnessing the power of blockchain technology. So actually not looking at the crypto space, but more about enterprise blockchain. My background is actually advising financial institutions through my time in BCG and McKinsey for many years, or working for them. Probably the most infamous of all of them, Lehman Brothers, for a short period before it went bankrupt in London. And even though my experience with the space started in 2016 going more into crypto, because I was acting CEO and chairman of the first company that issued an exchange-traded note mirroring Bitcoin value. I shortly afterwards left and started Norbloc, and essentially very much work around enterprise blockchain and how the technology can be used in areas other than cryptocurrencies.
Fantastic. Thank you so much, Astyanax. And it looks like you're both experts in the field. That's why we thought it would be interesting to share your views with the audience. And Astyanax as an entrepreneur and Efi herself as an advisor bring different values on the table. So I would like to start this discussion with Efi. As you very well mentioned before, most of us have come across to blockchain approximately a few years ago due to the also controversial, allow me to say, discussions around cryptocurrencies. The sector itself has progressed a lot over the past few years with the rise of stablecoins and the interest of the banking sector into it. We would love to hear more from you on that perspective, if this is possible, Efi.
With pleasure. But I have to ask you something. It's better not to call us experts because, as you said, this is a space that is evolving. It's a space that, in a way, we can argue it's trying to find product market fit. What is the killer, if you want, use case? I guess the markets are always looking for either unicorns or, big bang for your buck and killer applications. And we're not there yet. I mean, I must say that in my opinion, the blockchain principles and what the narrative that it stands for, which is the true innovation, has actually succeeded. So having said that, there's, as you know, many attempts and many use cases, even during this crisis, the COVID-19 crisis. We saw, and we're still seeing, attempts to use blockchain for tracing apps and in that realm. But of course, blockchain has inherently different social and political aspects to it when we attempt to use it in either an enterprise or for governance or for whatever use case. So it becomes a complicated issue. So in that sense, that's why I started off saying, don't call us experts, because it's a little bit dangerous. I must say that I have a good understanding, but I can spend half an hour to tell you where I think that I understand and where I'm clear that I do not know, certain parts. So what you said, Veronique, is very true, that most people came across blockchain because of cryptocurrencies. And these are our animal spirits, right? We are alert to something that trades, that moves, and especially if the moves are as impressive, either to the upside or to the downside, as cryptocurrencies have been. But of course, as Yanax will also talk about more extensively, this is not what blockchain is only about. And I like to make two distinctions. I like to think of it as an infrastructure for all sorts of possible use cases, be it, systems for voting, for governance, even in the political sense. That's kind of one extreme, over to how science is done, how people collaborate in the music world, in e-commerce. There's so many applications. If we take what's going on in the finance industry beyond the cryptocurrencies, I think the biggest development that is here to stay, that is clear, is the stable coin growth and development. And it's very interesting because it started off by a couple of stable coins, and I would say namely one, Tether, which is a dollar-backed coin, stable coin. So basically, when you buy Tether, it is backed 1-to-1 by the US dollar. And I'm not going to get into any discussion about whether that's actually the case or not, but let's take it as a given. And this stable coin has been used really as what is called an on-ramp and an off-ramp into the crypto world. So if somebody wants to buy today, some cryptocurrency, the easiest and fastest way is if you own already Tether or some such coin, because then you can nearly instantly, so to speak, on your app buy the cryptocurrency that you want to buy. Whereas if I want to send my Swiss francs or my euros to buy a crypto coin, then it's going to take quite a while to wire that, to get it to the crypto exchange and so on. So that was the first use of these stable coins. So in a way you could say, okay, who cares about all this? This is all, again, about trading crypto. I'm not interested. And the truth of the matter is that the market showed that there's another fit, if you want, the product market fit for stable coins. And this is around payments. And payments, I mean, no matter how we evolve, is definitely core to any economy. There's no, going around that. So given that payments are core, the question is blockchain going to change this? Of course, that was Bitcoin's principle, peer-to-peer exchange. We're doubting whether that's good for payments, but now with stable coins, we are less doubtful, because it seems like it could be a good use case where we use stable coins and I can send you dollars or euros or Swiss francs if we have a Swiss franc stable coin, which by the way we do. And I can send it instantly. I can see it on my app, on my, whatever e-banking, if you want, I have, and see that it goes not only fast, but where it is, how long it takes, and so on, which is not the case with any other payment. And actually, it's interesting, just last week, one of the more aggressive banks in Liechtenstein, which has also been quite progressive in terms of adopting a very broad and non-restrictive regulatory framework, the Blockchain Act, and therefore has fostered some innovation there. One of the banks there, Bank Frick, has listed one of the dollar stable coins, the Circle one, the USDC, and is enabling their clients, corporate or not, to make payments through that stable currency, which again means a different process, which is much more transparent, much more auditable, much faster and efficient. So
that is a very good description to an introduction, essentially, for most of us, I guess. Perhaps, Astyanax, you could share a little bit from your perspective, because you have founded a company, Norbloc, and essentially you are enabling individuals, organizations, and regulators to effectively manage and securely share and know your customer data.
Mm-hmm.
So would you like to share a few things more about what you do and how this complements what Effie mentioned to the scene?
Mm-hmm. Absolutely. So what do we do at Norbloc? What we do is essentially we try to break the silos of regulated data. Regulated data is any piece of data that has legal implications and legal significance. For example, your identity, your health records, licenses from governments, etc. These are all, we consider them regulated data. Right now, they reside in silos. To give you a very brief example, if you go to a bank and you onboard the bank, give your identity. They create a file for you, which is called the Know Your Customer file. They have to do this so you don't launder money, or if you do, they know who you are, and then they can actually report you to the authorities. Now, what happens today is that you do this with your bank. Typically, we don't have just one banking relationship, so you do it with another bank, you do it with your mobile operator, you do it with your utilities companies. So essentially, each time as a customer, you have to collect your data and give it to entities to validate it. So there's enormous duplication of efforts as a customer to do this. All the entities that receive your data, they have to validate it. So they validate it in silos. And if one of them does a bad job in validating it, they will never find out. They will have stale, out-of-date data. So what we do is that what we say, let's create an ecosystem where as a customer, I can create a file, a KYC file in this case, I can share with one bank, the bank validates the file and then places it in an ecosystem. And then if I want to use that file with other participants in that ecosystem, I can just give my consent as an owner of the data, and then that is shared with other banks or institutions. And the recipients don't have to validate it again, because they can see, to the same extent at least, because they can see that another party in the ecosystem has validated the data. That's essentially what we do in Norbloc. And we started this application when blockchain started becoming really popular back in 2015, 2016, the UK government came up with a very long report, very well written actually report, with the different use cases of blockchain technology. Clearly, crypto was one of the key areas that they basically reported as being a great application. Another one was know your customer. So essentially, this data exchange that I just described. And we piloted the solution for many years, and actually now we're the first ones in the world that have it in production in the United Arab Emirates with 8 institutions. How it practically works, you can register your company with the corporate registry in that country. Then you can select out of a list of banks that you would like to start a relationship with. Once you select one bank, then the validated data you provided to the corporate registry and the corporate registry has checked is pushed on that bank, and you open a bank account in minutes. If you change any data with the bank or the corporate registry, the other party finds out. So this is something that actually right now is very much in use, and that's what we're doing in Norbloc. Essentially allowing regulated data to have one version of truth and to neutralize efforts to validate it across institutions, but also within institutions. Let's say large banks between HSBC, London, HSBC, Dubai. So these are also cases where we have duplication of efforts.
And they don't mind having an external platform doing this, facilitating this essentially. You mean they are happy to use a third-party platform?
So actually, that's a very good question. The key thing about what we do is that, to put it plainly and bluntly, we provide the piping. So essentially, we connect the silos as they exist today. But Norbloc does not store any data, does not process any data. We just make sure that these silos have the same version of data, and there is an immutable log of who did what on these silos of data. But as Norbloc, we do not store any data.
That is very interesting.
Who owns the data? I'm sure you are asked that question all the time, and it's a big discussion among those that are considering to participate, right?
Of course. So actually, who owns the data is the customer of the bank.
Okay.
Who owns the validating stamp on that data is the bank that validated the data.
Right. Right. Very interesting.
So it's interesting to see, and we'll come back to ASEANX on that note. I would like to ask you, Effie, a question in regards to a report you have started producing. You have, from your expertise, you have seen that blockchain is now used into wealth management as well, right? Yes,
Definitely. I mean, it's early days, but we see the effect, and it's in different parts of what I call the entire wealth management process. Of course, a part of this is to think of cryptocurrencies or any other digital asset as a new alternative asset class that can be part of a portfolio, whatever it is. I mean, we can say you should have an allocation of 1% or 10%, but clearly it is becoming an alternative asset class. So in that sense, it is, you know, influencing wealth management, but also in many other different ways. One of the most important ones, I think, has to do with how financial securities, whatever they are, whether they're equities, bonds, funds, whatever they are, there is a whole administration around them, right? Where are they registered? How are they cleared? How are they settled? How are they administered, right? And in that part, there is a very significant role for blockchain to play as an infrastructure. We already have some use cases. One in London, definitely Calastone is a company that is quite a leader in the mutual fund administration, and they are using blockchain as an infrastructure to facilitate that and make it much more efficient and transparent. And also there's other companies in Luxembourg, which is obviously a very big financial hub, that are also working on using blockchain as an infrastructure. And I can go on and talk about this. I'd only like to add here that on the more sort of emerging trends on how wealth management may change because of blockchain, we have the whole space of DeFi, which is really decentralized finance. And that is a whole new way of thinking of wealth management, which has to do, for example, with staking. So staking, you know, your holdings, whether they are cryptocurrencies or whatever tokens they are, and earning interest and borrowing and lending without intermediaries, and the whole asset management structure, and creating financial contracts powered by blockchain. So we're starting to see these, and I'm actually working on a report that is going to be an annual report that is really focused on this aspect of what is blockchain's impact on wealth management. We are going to start this report profiling about a dozen of companies in different areas that are involved in changing this space, and also with a focus on their insights. Where do they see the market now? What are the challenges? And how do you see them going forward? Because it is important to include that, because the market is not mature. It's not, you know, the dominant technology, obviously, much like what Astyanax was saying with Norbloc. It's not the dominant technology that is used by KYC, but these things change in rhythms that we can never predict. We always think linearly about innovation. So that's really what I'm working on right now.
It's so interesting to see the different sectors getting involved. Before we move on and move ahead, I would like to share with also the audience watching us live from Facebook. If you have any questions, feel free to ask away, and we will include them here on the chat for our speaker's reference. On another note, we're going to have a networking session after this discussion for 30 minutes into breakout rooms. We have named them after the favorite cities of ours in tech, from Shenzhen to Silicon Valley, London, and many more. We have also Stockholm and Zurich into into these breakout rooms, honoring our speakers. So
can I go to Stockholm, and as Diana comes to the Zurich room?
You will switch. So I would like to ask you, Astayanex, following Effie's points on wealth management, because we see how the private sector works with blockchain, and now there is a lot of discussion around the EU and governments themselves that are getting more and more interested in regulating and finally deploying blockchain technology as a new infrastructure for security. So could you please tell us what your forecasts are, as well as what are the benefits and perhaps hidden risks you see for the societies and its citizens?
Of course. So it's looking back in 2016, the interest of governments when it comes to blockchain technology is actually to find out where, excuse me, it could be applied. Now, as we move forward, say the interest of governments into a technology which is used to disintermediate transactions and in a way take governments or central banks, etc., out of the equation, it's quite an oxymoron. Nevertheless, they do believe that, and rightly so, that this should be part of this effort. So I would say, at least from what I see, the main focus right now is very much around central bank cryptocurrencies. This is where governments really have made a lot of strides, and they're really putting a lot of effort there. And you have actually in Sweden, the central bank here in Sweden has been looking into a crypto-based currency that's going to be issued by the central bank here and used by citizens here in Sweden. So the focus largely on cryptocurrencies issued by central banks. When it comes to other areas, where, for example, sharing of regulated data or trade finance, these are not areas that typically governments play a big part. Nevertheless, these are areas where governments can actually have a node where they oversee, they regulate the ecosystem. So typically with there, what they try to do is initiate a dialogue or participate in a dialogue. Where you have the central bank issued cryptocurrencies, is very much leading the dialogue. Now, going forward, I mean, you have a lot of efforts from EU to basically catch up in the space. I mean, you have the EU Blockchain Observatory, where they try, to map all the different activities and implementations of blockchain technology in the EU. You have many working groups that they try to create protocols and they try to create rules around how blockchain technology could be used. I think that with my personal view, my personal humble, non-expert, but practitioner view, is that governments will essentially play a big part when it comes to cryptocurrencies issued by central banks. But in terms of protocols, in terms of all other applications of blockchain technology, the private sector will be the one that's going to lead the innovation. And essentially the market will dictate the standards eventually. That's my personal view. Now, the pros and cons. The pros and cons is that essentially when you look into blockchain technology is great because it disintermediates. At the same time, blockchain technology is technology that has an immutable log of actions. So for example, if you take Bitcoin, the most elementary blockchain form out there, you have a sequence of transactions that basically you know exactly from the moment the currency, one Bitcoin was created, where it was actually used, to which wallets, etc. So there's a lot of transparency there. The transparency is also coupled with pseudonymity because you do not know the wallets, who owns the wallets, where these Bitcoins come and go. Nevertheless, if you have a central bank issued cryptocurrency, the level of pseudonymity and the level of transparency is actually dictated by the central bank. And this is both an advantage and a disadvantage. So in many cases where we have governments that are actually, they're not that benevolent or as benevolent as a government should be, that could be used to even control spending, to control consumption, and to create data sets that governments can use to control populations. So it's really a double-edged sword, blockchain technology, and it can have many great applications, but also many malevolent applications.
But as Astayanex, that's the case with everything, right? Even all the scientific discoveries, right? That of the past.
Yes,
It's a question of how we people use it. And I think that we're going to have a great opportunity with the soon ready launch of the Chinese central bank of their stable coin, which is ready, it seems, by year end, that their stable coin is going to be in the market. They've already started beta testing in a closed circle. So this is going to be one of the big, applications that everybody will be watching, the DCEP application. And as Astayanak says, how will they control international trade and retail domestic spending if they're using the DCEP in their economy? It will be seen. And then we have the Libra stable coins to watch when they come to market, which are going to be pegged to single currencies instead of baskets. And there, it's a very interesting case because essentially it's more about whether it can be used to change e-commerce and advertising. Because if you think of it, Facebook is an advertising business, and maybe it will also become an e-commerce business. And that is where we will see whether these stable coins beyond payments will also change the way advertising and e-commerce works. So lots of exciting things ahead of us.
That is very true. That is very true. So perhaps it is worth moving forward with the questions from our audience. So I see there are some interesting ones. Let's start with the question from Nico Sikas. It is a kickoff question for both speakers. So if you can briefly answer both of you, what is in your opinion one hand the main negative asymmetry danger of blockchain faces that blockchain faces, and on the other hand, what is the key positive opportunity for blockchain? Perhaps it is something that we touched upon earlier. I don't know if you would like to add something more.
Is the question about what the threats that
the danger and the opportunity of the blockchain as technology, I guess.
If I quickly answer this one, is at the core of blockchain technology is disintermediation, which is both an opportunity and a huge threat. Right now, the intermediaries that we have in life, whether these are central banks, whether these are actually commercial banks, whether these are legal systems, they're there for a reason, to instill a sense of order and justice in many ways. Now, if you take them out of the equation, you can do so when these have failed to provide the service that they're required, but in many cases you can take them out and the result may be worse from the one that you had before, because you realize that they were providing a service to begin with. So disintermediation for me is actually a key thing that can be both good and bad, both an opportunity but also a downside of using blockchain technology.
I'd like to add with that, and I totally agree that I think, the technologies that we have today across the board, and it's not only in finance, have been hugely beneficial. But it's more about convenience and not predominantly about fairness and inclusion. And of course, one of the big opportunities with blockchain for those that are, visionaries or want the better is that blockchain can enable a fairer world, be it in finance, in banking, or on the web. Web 3.0 should be fairer, right? Blockchain has that potential, but as Stajanak said, it's a question of who, person, corporate, whatever entity takes and applies it, and whether it actually makes it happen. So it's yet to be seen.
There's a question for you, Stylianides, from Mary Tripsas, a board member of ReloadGreece. Do you think that Norbloc's market is winner take all, in which one of two blockchain ecosystems will dominate the know your customer space, or can multiple players survive? Same question for other blockchain ecosystems, for example, IBM's Food Trust blockchain for food supply chain.
It depends. If we are the winner, yes, it's winner takes all. Otherwise, there's going to be many winners. I'm joking, clearly, but basically, the key thing is that yes, largely it's winner takes all per jurisdiction, though. So, for example, under a regulatory jurisdiction, you typically can have up to one KYC ecosystem, the same as you can have one KYC utility. But between countries, actually, there can be many winners. In between different countries, you can have different companies, different protocols. And also, the other thing that we should consider is the fact that you have ecosystems that are between banks, but also ecosystems that are within banks. So there are quite a few different ecosystems in size, but simply put, within a jurisdiction, yes, it's largely winner takes all.
Spot on.
Very nice.
Effie, would you like to add anything on that?
No, I don't want to add. I mean, the only thought I want to add to this, you know, if we look at the different protocols, right, that are out there and are competing, you know, there's Ethereum and there's Tezos and there's Cardano and those types of protocols at that layer, there is the valid question out there whether it's a winner take all or not, or will we have multiple blockchains that are more domain specific in different, you know, areas. I think it's early to say this. It's even early to say whether what will be the sort of allocation between private and public blockchains. For a while, you know, we would think that in the enterprise private world, the private blockchains will dominate. I am starting to doubt that. I think that there will be a healthy mix more than I thought before. So it's, for me, a thinking that is evolving. Stylianides, I don't know if you have any thoughts around that.
Yeah, so actually, it's my answer was based on Norbloc's and Norbloc's markets.
Yeah.
When we look though, because if you touched upon a very big subject, which essentially is what blockchain protocol will prevail. Yeah. And in enterprise blockchain, in Norbloc, we've worked with Ethereum or Quorum, we've worked with Fabric and Corda. I mean, they all have the merits, the drawbacks, etc. And right now, it's way too early to determine which one will win. And it may not be that winner takes all, even in protocols. But at the same time, the way we think about protocols is that they are like Android and iOS. You may have 2, you cannot have 10. That's why I'm puzzled when even today I see companies that start having their own protocol. In an area that network effects are so strong, I think it's a bit too late in the game to create a new protocol nowadays.
Very nice, very nice. There is another question, a bit more specialized for Effie, it's for you, which is focusing on the stable coins and wealth management. So what are your views on the DeFi lending platforms and their future? And also what's also considering that today we see them offering interest rates of 10% plus and lending rates as low as 1%. Are they engaging in a war with the traditional banking system?
Okay, they are not engaging in a war with the traditional banking system. I mean, the silo between them and the traditional world is really huge. They're definitely operating within the pure native crypto world clearly. So we're not there yet. I think, you know, the growth in the DeFi market has been quite impressive over the past year, clearly, but still it's a very small market. It's starting to get in its size also crowded, and I don't think that it has room for so many players. And we also have the fact that we are waiting to see how big the proof of stake market will become, waiting for the Ethereum 2.0 to be launched. That is going to make a big difference. Yeah, I think that, you know, staking is something that is very sort of niche right now, extremely niche, and not in the banking system. But the interest in this environment, in this macro environment, in understanding what staking is and how you earn interest in this native blockchain world, I think is very appealing.
Last but not least, there is a question addressed to both of you, which is for the wider sense of blockchain, from Mike, about the innovation and where the innovation is going to come from, and where you see the mass adoption. I guess the mass adoption is referred to the sectors.
I'm not clear about the question, actually. It's too broad a question.
It is a little bit broad. I don't know if Mike wants to elaborate a little bit further on his question. In the meantime, if we give Mike some time, I would like to let you know that we have allocated the rooms. So if you're happy for the networking, we'll start moving into the breakout rooms, and you can continue the discussion there. I don't know, Kate, if we have any other questions from the Facebook page, if you'd like to add them here.
Hi, Veronique. There's no specific questions from the Facebook Live page.
Okay, fantastic, fantastic. So I guess it is worth moving forward with the breakout session. I would like to thank you all for this webinar. It was a very interesting discussion. A lot of things were relatively new to me as well, I guess, and for most of the people. So let me move on with it's the first time I'm doing it with the breakout rooms. So let's see. It will work.
To Stockholm, please.